Good afternoon, everybody. It is Saturday, September 4th. Hard to believe, but yes, it is September. Are you ready for September, Barry?
I'm ready. I'm more than ready.
No more summer doldrums, right? It's time to go.
That's right. It's time to go. I'm ready.
Fortunately, the cycles are changing. The seasons are changing. Everything's changing, and let's hope volatility is kicking up and changing for good here. On today's show, we're going to do something a little different. As we mentioned about a month ago, once a month, I'm going to dedicate my part of the show to strictly reviewing the monthlies so we can sort of zoom out from the day to day, make sure we understand the bigger picture, where the trend is, what the sort of the tailwinds are. From a higher time frame perspective. And so today, that's what I'm going to do. And many of you are looking at this Bitcoin chart and saying, boy, that looks different than the one you usually do. Well, this is the Bitcoin monthly. Barry and I were batting it around back and forth about the merits of Bitcoin and what are they going to do with Bitcoin and what are the authorities going to do with it. From a technical standpoint, we've been talking about the dailies looking very bullish. Well, if you zoom out and you take a look at the monthly, it's the same story. We came down, corrected hard, held on a full square, 3 different months, tested it, couldn't break it, couldn't get below. Monthly closes were nowhere near it, so they bought it up every time, and we've actually pushed up now, and we're above the half square. So as long as we are above this half square, which is in this 43.3 area, 43,300, you got to expect a test of the full square up here, 56.7, 56.8 area. There's, from a technical standpoint, forget about its merits or whether Bitcoin is a fraud or whatever. It is bullish on a monthly basis. It is bullish right now on a daily basis. It's banging its head up against that half square on the daily that we talk about each week. I just don't see anything bearish about it technically. What's your take on Bitcoin, Barry?
I'm cautious, but I think at least the test of that upper square is in order. If not, test the new highs. My take is, if we can hold the half square, which we're doing so far, we'll probably go and test the full square. And if we take the full square, then on to the next half square above, where is that? A little bit under, what's that, about 70,000, right? A
little over 70, yeah.
Yeah, I think we could definitely get there if these lower boundaries hold.
Yeah, and I mean, you and I, neither one of us do Elliott wave, but if you look off of this low we were talking about, you had a first push, one pullback, big move up, which would be your 3, and then this corrective here looks like the 4. So we should get one more push higher, whether it fails, makes a lower high, or pushes through and makes a higher high.
Yeah, well, that's the thing with that full square. If 50 is gonna fail, it'll probably happen around that full square.
Yeah, and that's in that 56.6, 56.7 area.
Right. So that's something to watch, I'd say.
So anyway, here's your bigger picture view on Bitcoin. And this is what I'm going to end up doing. After Barry throws it back to me, we'll do this for each of the commodities that we cover. And it's a really interesting picture to look at, a different perspective. And I think the people listening will find it useful. So let me throw it back to you, Barry. Run through the big 5 and see what they show us this week. There's the E-mini.
All right. Well, I'm looking forward to the monthly charts, Ben. It's the first time we're doing it, and I think it'll be cool.
Agreed.
Let's see. Where did we leave off? As I'm always thinking every time we pop this up, I'm always thinking.
Yeah, this one's a cliffhanger because, as you know, it just keeps grinding higher. And when we look at the monthlies, will tell a real interesting story. But let's see what the dailies are.
Well, we're reaching, boy. I tell you what, we keep reaching. So extended to the max. I guess there's no limit to extension, right?
In this game, yes.
Well, here, I think we left it off last week talking about a couple of levels. And I think I said if 44.92 is held, then we'll probably go up and test 45.40 area. And
that's correct.
Yeah, and we did that without much of a problem.
Mm-hmm.
And for next week, we might have to change it up a bit. Let's see. Well, I would say I'm going to change this 45.40 to, I worked up some numbers. Give me 1 second here. To 45.55. And that would be the number to get above. That's going to be our resistance for next week. And support, well, I think we can go with 44.92. That's fine. The basic idea for next week is it's possible that we, take a break before finishing up this ABCD up. Not that we have to, but it's definitely hanging up there. Mm-hmm. So the key thing to watch is if we can get above 55 and hold above it, and if we can manage that, well, I would say 45.70 is next, and then probably 40 right on to 46.05, somewhere in there. Those are the levels I'm looking at, and I'll update the spreadsheet with those.
It was an interesting close this week too, because we're right in the neighborhood of both monthly and weekly resistance right now.
Yeah, we do have this 45, 50, 55 areas resistance, and so it's possible we go back down and test 45, just as a habit, right? We really didn't have a good test of the 45. We just kind of broke out and left. So it's possible we kind of back and fill a bit. That's all I have really for the ES. A key level is this 55. If we get above it, I think just continue to trade alongside. If we don't, it's possible that we end up in a choppy situation. But if you check the Twitter updates and the fuse lines and the 4-hour charts that we post, it'll be easy to see if we're tilting to the downside and if it's a consolidation or if we're going to do a quick run to test 4,500. So
also the spreadsheet. Remember to check the spreadsheet where levels are updated.
Yeah, Ben. Yeah, you update those almost daily or as you need it, and
exactly,
it's always up to date. So you guys can check it, and that's in the description. You guys can go below, and it's in there. And let's see the weekly. Take a quick look at the weeklies. What can I say? Last week, we talked about the 44.88 level, being that if we can clear it, we're in a strong position, we can rally, or the week before that, we talked about that, and we've done that, and we're moving higher. So the next key level on the weekly chart would be 46.40, and that's quite a ways up, but we'll see how we do. Mm-hmm. And the slope is just relentless, eh? I just... it's just incredible. I've never seen anything like it. And I'm curious to see how it all pans out at the end.
Right.
So, and it's still doing well. Hey, long as it's moving, not much left to do. So we just trade it.
Agreed.
Moving on to bonds. Just to get you guys up to date, we were looking for resistance up around this 166.10. We got there, turned back down. Looked like we were working this triangle, but major support was at 62.08, 162.08. And I think last week or the week before, we talked about bonds possibly getting range bound in the zone, and looks like so far that's what's happening. So the key level to watch is the 62.08. We really, if we get under that by even a few ticks, it's wouldn't be hard to go and test 159.04. So those are the two levels to watch. Otherwise, I expect this, at least for the next week, will probably be hanging in here above 62 because of the support level.
Barry, do you see it as a bullish consolidation given the structure?
Well, I think it's bullish. I work with these levels a lot, well, as you do. I think it's bullish long as the 6208 is held.
Right.
So right now it's okay. So we'll see. We'll have to see how this consolidation pans out. I don't think this is done yet.
I mean, as we discussed, my take right now on the bonds is that this is a bullish consolidation and we should have one more push higher.
I mean, ideally, it'd be nice to go up and test the top of the square, right?
Yep.
Around 170. And I think you had something around 170 also.
Yeah, 68 and a half, 69. Yep.
Right in there. Well, if we get through this and break to the upside, clearly there's going to be a lot of momentum getting picked, coming into the picture. So we can easily do that.
Sure.
But the balance point to watch now is to this 162.08 because we do trade off the edges. So we're watching that very closely.
Mm-hmm.
And the weekly bonds, pretty much the same story, not much to add. This the level I'm pointing to around 66.25 on the weekly was a resistance. Last couple of months we've been watching that and we're coming back in off of that. And we do have a trend line and the weekly support around 160. So that's a little bit further down. We'll see how it happens.
Mm-hmm.
For now, this is what we're watching. 6208 is the level to watch. Moving on to crude. We finished the ABCD a couple of weeks ago. We've been and we had this solid support level around 60. Crude bounced back. And last week we were talking about 69 being the key level to test and to get above. And, we managed to do that last couple of days of the week. And now the key is really holding this 69 and, figure 68, 69, right in that level. And in the lower time frames, if we can hold that and we turn up, I think we can easily move higher. We've been bullish all along. So other than when we did the ABCD down, so let's see how we pan out. But the levels to watch would be 69. If we get under 69 and make air below that, I would be a little bit suspicious of any kind of bullish leg up and let it consolidate or finish up what it's doing here. So the two levels to watch 69, 66.75 is the one below that. And if we hold the higher number, we can easily make it higher. If we can't hold 69, then expect a little bit of a consolidation next week.
Yeah, I'm interested in the character of this next move, whether it's, consolidation, an actual pullback. What it does will tell us a lot about going forward. What's next?
Yeah, I think above 69 is bullish, super bullish.
Agreed.
We could just break through that trend line, this trend line, and just fly. So it's really important to see how crude handles that, and we can pivot off of that key level there. Crude on the weekly, well, fairly clean. Again, huge reverse bar. It was outside reversal on a weekly basis, so that's nothing to sneer at. And it looks, this is bullish. It's holding okay. Moving on to gold.
Beautiful week for gold.
Very good week for gold. I think we left it off last week talking about 1789 being a key support level. And if that's held, we're going to go up and test 1832. And right about, closing time on Friday, we got there. It's in a bullish position. What can I say? Pretty much the same story as crude. If we can hold this 1832, I think we can certainly go up and test the old highs. And Ben, I know we were talking about this midweek, trying to see how to position anything going forward. So I think this 1832 is a key level to watch. I mean, even if you back up a little bit, long as we hold above this middle of this consolidation, I think it's still bullish.
Mm-hmm.
But clearing 1832 will just definitely clear the path to possibly a new high. So that's the arrangement to watch.
Boy, that weekly bar really does look like it's a clean out, doesn't it? Like they were just cleaning it out and then taking it off from there.
You mean the low bar there?
Early
Yeah.
August.
Mm-hmm. So here's the weekly gold chart. Again, we got this huge triangle working it. Ben, I know you talk about this all the time. So there's a triangle. And 2 weeks ago, we talked about this. If we can get back above this line, above 1766 on the weekly basis, that will probably go up and test the halfway, 50% of the square. And that's around 1872, 1875. Looks like we're on the way to do that. So watch the levels that we posted and we talked about, and that'll help to see if it's on track.
Mm-hmm.
I'm trying to get through this quickly because I know we got a huge number of monthly charts to go through. So
yeah,
keep it under time. Dollar, boy, how about that, Ben?
Surprised. Yep.
We ran up into resistance. Last week, we talked about how important 92.50 was to hold, and the dollar really couldn't hold it, slipped under, and here we are. And next big support, you can call it to be the last low over here in the July low, which was, what was it, 91.78.
Mm-hmm.
And our key weekly support, or the major support, is 91.42. So I'm expecting it, we're doing 72 low to low. It's possible that we stop here and find some support, and the support levels will be this 91.42 at the worst, or right around the July low. That's looks reasonable. And we also have a trend line right in that area. So that trend line's around 91.73. So right in here, it's running into some good support. We'll see how it goes. And, if you look back, there's support, we have some other lots of previous tests of the exact same area. So we're coming right into that. So I'm expecting that to hold. Again, it's 91.72.
And I'll tell you, getting the dollar right is important because this cycle, everything seems to be keying off of it. Bonds, gold, commodities, stocks, everything is reacting to moves in the dollar.
Well, we're coming up into support here. So keep your eyes open. You got the levels. And looking at the weekly dollar, pretty much the same story. We ran up into the 72 and turned back down. So it's possible we get down to this quarter of the square. It's around 91.70, 91.70. And that's reflected on the daily chart too. So, 91.42. It's right in that range, right? Kind of like what we did for crude. We draw a little box here. So we have that. There we go. That's our little support zone.
Mm-hmm.
All right, moving on to the euro. And Ben, we were talking about this earlier this week. We might start doing a separate show just for the
currencies.
The currencies and currency futures, and maybe about a dozen pairs. So if we do that, we'll probably do a different separate show. Else it's going to be a 2-hour show, Ben. I don't know if that's going to work.
I don't think so.
So we left out the euro last week or week before. When it stopped on our support, we were looking for it to rally up and test the half square, and we did that as of Friday. very clean. So as you can see, right, Ben, the dollar's going down into the support area, euro's up at resistance area. So that
Yep.
lines up. And
And
so
gold and crude are up into resistance areas. I mean, you can see how it all interplays.
Mm-hmm. So the number level for the euro is 1900, 1915. That's really the area we need to clear if the euro is going to be stronger. Otherwise, I'm expecting it to sort of that level to hold for now. Yeah, for now. We'll see how
That's a good square. It's working well.
It's working well. The key level to watch now, we came off the quarter, we were bullish coming off the low. Now this is we trade from level to level mainly. So this is the level to watch for possibly some kind of a pullback or correction or consolidation. And once we clear that, so it's a 1900 level, then we can set up for the next leg. So for now, it's you have to expect some weakness.
Mm-hmm. At least a pause.
Pause, yeah. So the weekly looks a little bit different. No pause there. Looks
No.
very bullish. And this fork that we've had for months
Working nicely.
Did its job. We came down to the low, held it, and the square too. So really the next stop on the square is around 1966,
Mm-hmm.
which is not that far. So
No.
it's possible we get up there. But we'll see how the daily works out. It looks like it's time for a little bit of a break there. And
Sure.
At least to be eyes wide open there. That's all I got. We'll put it back to you for the monthlies. Looking forward to that. Lots of info. There we go.
And there you can see the NQs.
Looking tall.
Very tall. This is everything you'll see in this go round is going to be monthly. So, the charts will go back with some good history and you can sort of see the price action. The thing to take note is look at the shape of the charts and the slope of the lines that you see on these things. So this is the NQ. We know since the March low last year, it's essentially been straight up. Now it's interesting that we've picked today and this week to start looking at the monthlies, because this one, the NQ, is right at a full square. So we've gone 2.5 squares off of the COVID lows, if you will, the lockdown lows that hit last March. This is significant. It's an important spot from the standpoint of, it's a decision point. We either get it.
Reward,
Yeah, I mean, risk reward number one, of course. But number two is we're either going to, go up, sit on top of here, and then use it as a platform to continue higher to the half square, or we're going to pause and either correct down to the half square or go sideways or chop around or, have a little more sideways movement. The point being is that if we want to continue this slope, it needs to get on top and keep going. It can't pause.
Mm-hmm. They just get steeper, don't they? Isn't that how the markets move now? They just straight up.
Right. Limitless. So, but the key thing I want you to take away from this chart is look at the shape, look at the slope, look at the steepness of the line. The next one let's look at is the ES monthly. And you didn't think it could get any steeper, did you?
I didn't, but there you go.
Again, this is going back to 2002 lows. The square starts. Here's your lockdown lows from last March, and it's essentially straight up. Again, this is not a plan. These are squares that are long term. They've been set for a while. You can see they're good at catching highs and lows, pauses in the middle. They work. Look where we are. at another decision point. Again, this is not saying that it's going to turn down and crash tomorrow. We're at another decision point. And Barrie went over you went over the weekly and the daily pretty well, showing how, it's at a kind of an important spot, and we got to either get above that 55 level, or, it's going to turn down and do something differently. So, but again, the key thing to take away from the chart, look where we are, look where we came from. So that's the ES. Let's go look at the bonds. So here's the 30-year Treasury on a monthly basis. First thing that I noticed, and Barrie and I were discussing, the slope is not anywhere near as drastic as the equity markets. Still a pretty good run over time, though. But look at the ascent, right? Versus the rockets that are straight up. So here, what's interesting to me is that we've pulled back. We held this support line multiple months, late 2020, early 2021, and we're bouncing higher again. I think the next real important point from a monthly standpoint is this, 68, 69, 70 area, which again dovetails with Barrie's work on his dailies and weeklies, but gotten from two totally different methods. So I'm bullish on bonds. This structure is good. We're pulling back off of a high. And when we get to this next decision point, I think it'll tell us a lot about where bonds are going to go longer term. But right now, it's looking like we're holding the support of this trend line off of the 2018 lows, and a test of this full square in this 169, 170 area appears to be coming. Let's go to, next we'll take a look at crude. There's crude oil. Now, crude has been a wild ride. Anybody that's followed it, the plunge in last March, April was historic, where crude actually on a couple of futures contracts went negative. We've been straight up since then, straight up on a monthly basis, very bullish. But now you can see we're stalling on this half square where prices stalled in 2018. Still bullish, but it's as Barrie was talking about, it's running into some resistance areas in the 69, 70, or support is 69, 70s resistance. I think we're at an important decision point there. Longer term, as you can see, we broke a major trend line, a downtrend line from 2008 highs on the way back up, came back and tested it. As long as we hold this full square, which is in that 61, 60 range,
right,
crude's bullish. Do we go sideways here and maybe chop around or bounce between this half square and the full square? Completely possible. But until that gives way, that this 60, longer term, crude is very, very bullish. Next one we're going to go see is natural gas. Here's natural gas. Now, take a look at this natural gas chart and remember in your mind the charts of the NQs and the ES. And tell me you don't see the mirror image. So here we had a huge spike in 2005, 2006 area, and we've been correcting ever since, and in fact have gone sideways for over a decade. Broke out of this downtrend line, and now we're starting to see a fast move higher. So this is why, for the last 2 months since we've been doing this, I've been talking about natural gas and saying it's one of my favorite commodities. The risk reward is in your favor. You're dealing with a multi-year base. that's coming out of that and just beginning to start to move on a bigger picture basis. I mean, it's why you've been excited about natural gas, Barry, right?
Absolutely. These commodities, well, just like you said, they can just not do much for years. But the small time, 20% of the time when it's moving, you got to be on it. So
absolutely.
Where is that?
And what we think is we've got a setup where this type of move is possible.
Mm-hmm.
And it's not only like, oh, there's a chance, it's probable. You know what I mean? The odds are in your favor that this type of move is potentially starting in something like natural gas. Next one, let's go to gold. You touched on gold, but let's look at gold from a big picture.
Yeah, what's the half square of the natural gas there?
On the downside here, support?
Yeah.
So support is at 367 area.
Okay. All right.
And the next target I have from a bigger picture is like 565.
Right.
Which is the full square.
Mm-hmm.
Let's take a look at gold. Again, this is a monthly. This is the monthly on gold. And you can see what we've been doing for the past year is really just a correction off of this high. And if you look at the size of the correction, it's even less than a full square, because we didn't quite make it up to the half square at those highs in 2020. And look at the support we found twice now, one with a higher low on a half square. So once this triangle breaks, it's kind of a triangle. Once we can break through this downtrend line, which is in this 1850, 1860 area, full square looks to be a done deal, like 1930. And then from there, because of the structure that we're seeing here, if we sit on top of this square, we're sitting on top of the highs from 2011. The next targets are up in here, full square type targets of 2,500 gold. But you can see the comparison with the equity markets. We're not dealing with something that is, up on stilts, hasn't corrected. There's just the risk reward is just better.
And the chart is very bullish. There's nothing bearish about this.
No.
So let the consolidation finish, and looks like it's winding up anyway. So.
Yeah, let's check out silver, its cousin. An even better risk reward standpoint, because you can see, again, a lot of these commodities coming off of major highs a decade or more ago, been correcting for 6, 7, 8 years, sideways action, breakout, consolidation. And again, the consolidation is sitting on top of this entire sideways move from 2014, 2000.
And what's that consolidate that level there, full square?
The full square on the bottom is about
21. Okay, about 21.
Yeah, around about 21. But once we break out here, the next move higher should begin. So you had a thrust higher, you had a correction, consolidation, sitting on top of previous highs. The next move is up. Probabilities favor. The next move is up. We get the next move up. Full square in silver should not be hard. That's $37, $37.40. So that's silver.
Even if you do a ABC up, that's around $40. So
correct. Yeah. It's very bullish.
All right.
Let's look at copper. Here's another one. Now this one has a little more equity flavor to it, because look at the move, real sharp move higher. But notice where we're consolidating after that move. We're consolidating around this square. It's been crisscrossing it, bouncing in and around it. And these happen to be from the right where the 2011 highs were. So I'm still bullish on copper, just waiting to see how it finishes out this triangle that's forming. Once we get on top of this square, which is around 440, once we can sit on top of that 440 square, we should see a next leg higher in copper. This one's the furthest along of any of the commodities, so the risk reward is not as favorable as, say, a silver or even a gold.
Mm-hmm.
Certainly not natural gas, but it still has a bullish tilt towards it.
But I remember you screaming about this chart back in 2020 when the monthly broke out.
Yep.
And
That's the trigger, man. When you see
yeah.
this tells you that something has changed, right? Because
Yeah.
previous tests of it failed, and when they just go back and make more lows and get into the chop and frustrate everybody. But once we break through, the game changes. All right, let's go look at the. By the way, I'm going through these in order that they appear on that spreadsheet. So if you're following along with the spreadsheet, you can sort of see how the daily levels compare. Let's go to the grains. We'll start with wheat. There's wheat. And again, this is wheat on a monthly basis. Same pattern, right? We made a spike high. This one was in 2008. We've been declining since, basically sideways for a decade. Breakout from a downtrend line, and now we're beginning to move higher. Wheat is the strongest of all the grains. It's showing the most resilience. The grains made highs in January, February, March, and they've been kind of correcting since. Wheat made a high last month. It's pulling back. But as you can see, it's pulling back above this entire consolidation for the last 7-8 years. So as long as we stay in this range above the full square, I mean, you got to expect higher prices are coming in wheat, and we're going to test this full square up at 962 area.
Hey Ben, what's the wheat support level there on the full square?
The full square is at 676.
All right. Mm-hmm.
And that's wheat. And wheat is the most bullish of the grains. Next, let's go to corn. Here we have corn. Same pattern, same story, right? Made a high in 2012. Sharp pullback, been going sideways for 7 years now. Breakout from the downtrend line, unleashes the power of a fast move higher, and now we're pulling back. We've been battling with this full square, and this month we've started below it. And what I've been talking with Barrie about is that from a timing standpoint, September, a cycle for grain, September is a good month for the low off of these these consolidations and corrections. So I'm looking for some sort of clean out moves in here, and you can see corn has been taking out the lows from on the way up and the lows that it made initially on the spike down. I think that's what we're seeing here in corn. So I'm watching to see if we can get and sit on top of this full square, because when we do that, which is at around 548, 550, that'll signal that I think this correction is over, and odds favor we're going to start moving much higher in corn. Next one we're going to look at is beans. Here's soybeans. Again, very similar pattern. This one made its high in 2012. It's been going sideways for approximately 7 years. Breaking out of the downtrend lines, unleashed a strong move higher. Stopped right where it should, which is at a full square. And look where our pullback has come, right to the half square. And again, as long as the pullbacks, if they hold the square or the half square, the full square or the half square, it's obviously bullish. But if it doesn't and it leaks back in here, look back and see, where were the previous highs? Where was this consolidation? Where were the highs during this consolidation? If we can stay above that, it's bullish, and people are accumulating it, waiting for the next move.
And what's that level at the low? The half square level, Ben?
Yeah, the half square here is 1275.
Okay.
So 1275 on the monthly is an important level to watch. Again, I'll repeat, and it's in the notes that are on the spreadsheet. If you're looking at the grains, we are really close to these lows from a timing standpoint, and as you can see on the monthlies from a price standpoint. So if you're looking to get involved with grains, now's the time to pay attention, because they look to be in the process of putting in these longer term, bigger picture type lows.
And 3 to 4 months is sort of a normal correction for grains. So, or at least for beans.
Right. The next group we're going to go to is the softs. The notes I have up on the spreadsheet are that the softs are still in consolidation mode, which is the case, and that's on the daily basis. But let's look at these from a monthly basis. Let's start off with cotton. Here's cotton. Recognize the pattern? Sideways for 9 years. Breakout. Kind of triangulated in here. We broke out again. So cotton is very bullish. On a monthly basis, cotton, the next target on cotton is the full square, which is at about 105.
Mm-hmm.
I think it, like the other softs, is still on a daily basis and shorter time frame basis, still kind of chopping around and correcting off of this monthly move you saw here once we broke out of the triangle. So it's correcting this right now. You can see that that bar is inside. So it's just been chopping around. But we watch this and wait and see, on the dailies and the shorter time frames for an entry. But this looks like it's, again, just about ready to be starting again, and potentially on its biggest move up, right? Because if you say this was the first wave, this is the consolidation second wave, we look to be staring in the face of a higher time frame 3. I don't know what's going on in that market fundamentally from a supply and demand standpoint, but I know in the futures people want to own it. So what do we watch? We watch cotton.
That's right.
The next one is cocoa. This one's interesting in that it's a little behind the others, and it's still in its sort of consolidation and wind up mode. So what are we doing here on a longer term basis? We're looking at when can we breach this downtrend line, right? This thing's been correcting since 2014, so 7 years. You've seen in the past in these charts, once we break through this long-term monthly downtrend line, you get a fast move. So cocoa is one that we're watching very closely, looking for this break to get out of this congestion and really, really pick up speed. Right. Next one is coffee. Let's take a look at coffee. This one we've traded very successfully this year so far. Let's see. We caught this move up in coffee.
Coffee.
Same pattern. Sideways movement for 9 years, coming off of a major high, breaks out, comes back and retests, and then we get the big move up. And look where this major move up on a frost scare in Brazil stopped, right at the full square, right where we would expect. We're holding now above the half square, pulled back sharply, held the half square on a monthly basis. We're kind of consolidating in here, which is why I said, they're still in correction consolidation mode, but looking for another move up in coffee as well. And last but not least, we have sugar. Can't have coffee without sugar, right?
That's right.
Let's see. Although the purists would say that's blasphemy. The black coffee drinkers.
Yep.
So here's the monthly on sugar. Again, a similar pattern. Major high 2011, sideways movements for 5, 6, 7 years, break out, pull back, launch, and now we're sort of correcting that initial launch here. On the daily, which you can see on the spreadsheets, the numbers are a little higher. They're 19.25 to 20.25. We're kind of trapped in that trading range. And on the monthly, it's 1865. As long as we hold there, or if it really, wants to shake the tree, it could still come down and test these previous highs within the consolidation zone in the 16, 17 area. But I don't think we're going to be able to see that. I think the half square is about the best you're going to do.
Yeah, half square looks good there.
Right. We pull back to the half square, and then we should be ready to go up and, at least test the full square 23 and a half area, which were the 16, 17 highs. So we just ran the gamut of the commodities. And again, just look at this pattern here. Yeah, it looks like, oh wow, that's a pretty sharp move up on a monthly basis. But look at it in comparison to this. That's also a monthly basis. That's also a monthly basis. So the reason we've been talking about commodities is not that we are, perma bulls on the commodities or our business depends on commodities doing well. We try and focus our attention on markets that are going to move and where is there a really favorable risk reward ratio. And as you can see from a bigger picture standpoint, 10,000 foot view, monthly view, the commodities really have a lot of upside left. Some are earlier, some are later than others, but on the whole, there's a lot of room left, and when we drop down to the daily and wait for that signal to get involved, there's a lot of room left for these things to run on a monthly basis. So anything else you have to add on these big picture commodities, Barrie?
I think the big pictures are covered well. No, we did a good job. Only other thing is I would ask people to maybe like our videos and maybe share them. That would be good.
Yeah.
That's about all. Other than that, I think the monthlies are covered. We'll go back to our normal daily, weekly reviews, charts
next week.
But the idea is to do these every month, right? At the end of every month, first week, we do a monthly review. And
explain to them, Barrie, why do we do that? Why do we do this? Why do we focus on these monthlies and making sure we know what's going on this time frame?
Well, one of the reasons is to get the longer trend. It's much easier to trade once you know what the bigger picture is doing, where the bigger trend is, and it makes the day-to-day work a lot easier. So you don't have to, drive yourself crazy on the daily charts once you know the bigger picture where things are going and the levels on the weekly and monthly basis. So
then it just comes down to figuring out where to get in when you determine that it's bullish on a bigger picture.
Exactly. So you have to, other than what we're showing here, you have to look at the monthly highs and lows, closes, and you'll see when markets pull back a little bit, you'll see how those levels hold. So that's what we talk about them.
All right. Well, everybody have a great Labor Day weekend. We know it is the Labor Day weekend. Enjoy your holiday. The markets are poised to move, and hopefully the information we provided will help you take advantage of the moves that are coming. So have a great week, Barrie, and we'll talk soon.
Thanks, Ben. Have a great week.
All right.